that the fourth quarter of this year we will be positive gross margin.
Welcome back, everyone. In today's video, I'll talk about Rivian Stock's free fall following their Q4 2024 earnings report. I'll discuss recent massive news and events, what Rivian needs to do to survive, and if I am buying the stock. I'm Brian, the Finance Ninja. Let's go. But before we begin, shout out to like and subscribe.
Let's talk about some numbers. You lost $43,000, roughly speaking, per vehicle that you built in the fourth quarter, about a $12,000 increase in the amount lost compared to the third quarter. And I know you outlined some of the changes that you're making in terms of cutting your costs. Is it realistic to think that you can get back or get to some type of a profit, positive profit margin in the fourth quarter, given the losses where they're at right now?
Well, if we look at the fourth quarter of 2022 and compare it to the fourth quarter of 2023, we reduced our overall cost per vehicle by about $81,000. And that's a combination of better operation, more efficient operations within the plant, and really improving some of the fixed cost absorption within the facility due to the ramp up. But the other big element here is continued progress on our material cost, and that's all the components that go into the vehicle. And so the shutdown that I just referred to, that we're going to be making these pretty significant changes across the vehicle in terms of cost structure, in terms of componentry, that is going to be a huge enabler for us to get to positive margin. And as we talked about in our earnings call yesterday, we still have confidence and want to be very clear that the fourth quarter of this year we will be positive gross margin.
The man you just saw is R.J. Scaringe. He has a PhD from MIT and founded Rivian in 2009 with the vision of creating electric vehicles that combine performance, sustainability, and adventure. Now, Rivian released their Q4 earnings on Wednesday, a week ago actually. What happened next was not pretty. Rivian stock collapsed 34.6% in the next 2 days. 34.6% collapse in 2 days. Now, Rivian has a market cap of $9.55 billion, PES of 25.52. Actually, let me know in the comments, is Rivian stock a value or a value trap? Actually, we're going to discuss that in this video.
Do you have confidence you have enough capital to make it to the R2 and production in 26?
We're incredibly excited about R2. I mean, when I look at the brand strength that we've established with our launch products, the R1T, the R1S, and just how well consumers have responded. Consumer Reports does an annual brand survey, and Rivian came out as the #1 rated brand with by far the highest rate of repurchase, meaning if you're going to buy a vehicle again, would you buy Rivian again? And by a significant degree relative to all other brands, Rivian came in the number one spot. And so as we think about taking that brand position and now applying it into a smaller footprint vehicle with a meaningfully lower price point, to be able to translate not only some of the brand excitement, but importantly, the significant market share that we've built with our flagship product, we're incredibly excited. So with that said, the organization is heads down focused on delivering to that. The product itself is coming together beautifully. We're going to be unveiling it on March 7th.
I have a full company report on Rivian and my Patreon. Oh, also, is Tesla worth $100 or is Tesla worth $1,000? You'll also find my DCF valuation model for Tesla at my Patreon. The link is in the description. Don't forget to check it out. Now let's see what caused this free fall. What spooked investors in the earnings report? Now, Rivian is known for making plug-in pickups, SUVs, and delivery vans, and has attracted investments from big names like Amazon and Ford. The company went public recently and quickly became the second most valuable automaker in the world, behind Tesla. However, since then, Rivian has faced several challenges, such as supply chain disruptions, production delays, quality issues, and regulatory hurdles. And as we all know, the latest blow came a week ago when Rivian reported its fourth quarter earnings and revealed some disappointing figures. Rivian said that it expects to build only 57,000 vehicles this year, which is roughly the same as last year, and far below analysts' average estimate of more than 80,000 units. Rivian also said that it will cut its salaried workforce by 10%, which is its third round of layoffs in the last 18 months. Now, Rivian's CEO, RJ Scringe, blamed the weak outlook on economic and geopolitical uncertainties, especially the impact of high interest rates, which have hurt the demand for EVs and, well, all cars. Now, nobody is immune to the interest rate hikes, but each company's response has actually been different. Tesla lowered prices, Ford and GM scaled back production, and Rivian is laying people off. Hey, she snuck in again. I think I'll call her Obi Katanobi.
And that
but
really
real quick,
represents...
RJ, only because RJ, we're running up against a break. I don't mean to belabor this. Understand the strength of the brand and where you guys are at. But to get to my question, are you confident you have the capital needed to get to R2 production, or do you think there's a possibility of a capital raise between now and then?
What we've said is we're very confident in the capital we have supporting operations through the end of 2025. There's a variety of ways we intend to ensure we can launch R2. So there's certainly opportunities to look at the capital markets, but we're also driving efficiency into everything that we do. And the emphasis on driving cost efficiency into operations, into how we deploy capital from a CapEx point of view, and of course, as I said, on the COGS side, on the gross margin side, is the highest focus within the whole business.
Now, I'm going to break down the key highlights and takeaways from the earnings report. Let's get started. Now, Rivian reported revenue of $1.3 billion for the fourth quarter of 2023, driven by the delivery of nearly 14,000 vehicles. This is a 23% increase from the previous quarter and a 98% increase from the same period in 2022. For the full year of 2023, Rivian's revenue was $4.4 billion, supported by 50,122 vehicle deliveries. Now, this was a 167% increase from 2022 and also exceeded Rivian's initial production guidance by more than 7,000 vehicles. Rivian also generated $39 million from the sale of regulatory credits in the fourth quarter, and $73 million for the full year 2023. Now, Rivian improved its gross profit per vehicle delivered by approximately $81,000 in the fourth quarter of 2023 as compared to the fourth quarter of 2022. Now, this improvement was attributed to three main drivers. One is fixed and semi-cost per unit reduction, variable cost per unit reduction, and increase in average revenue per unit. Rivian has held its operating expenses flat as compared to 2022 while increasing its revenue by 167%. That's how the number keeps improving, the bottom line. Total gross profit for the quarter was negative $606 million. Now, gross profit for per vehicle was approximately negative $43,000, meaning it cost Rivian $43,000 more per vehicle than they received from the sale. And that's a huge negative. And Rivian's laser focus on that. We'll get to that in just a moment. Now, Rivian posted a negative EBITDA of $1.1 billion. Now, Rivian attributed the gross margin decline to the lower volume of vans delivered to Amazon due to seasonality, since Amazon has less bandwidth to take in new trucks in Q4. Now, Amazon's one of Rivian's biggest customers and has ordered 100,000 units from Rivian. Now, Rivian said that it will prioritize cost cutting over volume growth this year, but still expects to lose $2.7 billion on an adjusted EBITDA basis in 2024. Now, Rivian's net loss for the fourth quarter of 2023 was $1.5 billion and $5.4 billion for the full year. Rivian expects to achieve a modest gross profit in the fourth quarter of 2024. That's just a couple of quarters from now, actually. So if they can achieve that, that would be a historic milestone.
So when you look at where the market is right now, your guidance for building 57,000 vehicles this year is well below what the street was expecting at 81,000. Where's the disconnect? Did the market, I mean, we've been talking about the market slowing down. Why did analysts miss it by such a wide margin?
Well, our R1T, R1S products, these are our flagship products. They have been performing really well relative to the market. So we have the best-selling electric vehicle with a price point of over $70,000. And so, as I said, the impact of interest rates is impacting the whole segment, the whole call it premium segment. But relative to the rest, we still have the best-selling product in the market. And so, as we look at 2024, we have a few things playing out. One is we're making a number of changes to the way we operate our plant, as well as our material costs, our bill of materials. And we'll be shutting down the plant for several weeks in the second quarter to make these changes. So that's an interruption to production. And then we're being very realistic just around the overall number of vehicles being purchased at these price points, in the price range of over $70,000. But as far as I said, as far as premium products go, we do have the best-selling EV in the United States today.
Rivian has $9.4 billion in cash and equivalents, down from $11.6 billion last year. It would be worse, but they took out a loan. Now, Rivian's long-term debt increased from $1.2 billion to $4.4 billion. At the current burn rate, it is estimated Rivian would run out of cash by the end of 2025, but Rivian is working on fixing the cash burn. However, even if Rivian didn't, there are levers they can pull, such as raising debt or issuing equity. I can talk, I promise. Now, stock-based compensation decreased year over year. Cash decreased by $4.4 billion in 2023. Now, Rivian stated, over the course of fiscal year 2024, we're focused on driving towards profitability, drive down cost, and achieve modest gross profit in the fourth quarter. Number 2 is customer experience and demand generation. Build customer demand and a robust customer experience. Number 3 is operational excellence, continuous improvement, and quality. Number 4 is technology leadership, integration of new technologies in R1, and progress towards the R2 launch. Now, the economic and geopolitical uncertainties and pressures, most notably the impact of historically high interest rates, have informed their expectations for 2024. Again, this is from their statements. Now, as previously discussed, continuing their statement, we expect to shut down the consumer and commercial lines during the second quarter of 2024 to introduce new cost-saving in-vehicle technologies to the R1 platform. We believe these changes will meaningfully reduce our material costs and position Rivian to exit 2024 with a much improved margin profile. Now, for 2024, we expect our total deliveries to be derived from our existing order bank as well as new orders generated during the year. Our order bank has notably reduced over time as deliveries more than doubled in 2023 versus 2022, and we have incurred cancellations due to macro and customer factors. Now, this means Rivian expects to delete their backlog this year, which to me signifies there might be demand issues. So we'll have to see throughout the year if that's going to be a problem. Now, 2024 guidance, vehicles produced is 57,000. Adjusted EBITDA is negative $2.7 billion. CapEx, $1.75 billion. Driven by additional investment in our next generation technologies. Now, it's also going to be their Georgia facility and go-to-market operations. Rivian also revealed that it will unveil its midsize platform, the R2, on March 7, 2024. That's pretty soon. Stay tuned for my video on that. Now, the R2 platform will leverage Rivian's key vertically integrated technologies, such as its software stack, propulsion system, network architecture, and vehicle electronics. Now, Rivian also plans to open new spaces and increase demo drives to build customer demand and enhance customer experience. Rivian faces some economic and geopolitical uncertainties and pressures, such as the impact of historical high interest rates, supply chain disruptions, and competition from other EV makers. Now here's Rivian's historical income statements. The parts I'm paying attention to at the moment, actually here, let me hide my face. There you go. The parts that I'm paying attention to at the moment are the dark blue, which is gross profit, and orange, which is operating income. Now the last 2 quarters needed to be better, honestly. These numbers need to improve. And hopefully they will, starting in the second quarter. Now here's the historical net income. And here's the historical cash flow. And the historical balance sheet. Now the metric to pay attention to here is total equity, which is in light green. That is the difference between assets and liabilities. Now Wall Street rates Rivian a buy with a price target of $18.63 for a 67% upside. Now, of course, we have the earnings call. You know, I've actually let me put it myself back on. Here I am. You know, I've actually used one of these phones. Who am I kidding? On to the earnings call. RJ mentioned cash equivalents, and short-term investments, which it expects to fund its operations through 2025. Note, though, that the R2 is expected to launch in 2026. Now, RJ didn't specify what will happen between 2025 and 2026 to cover the new factory and the R2's ramp, but I'm expecting a capital raise of some kind. Rivian announced that it will shut down both of its R1 lines in its normal plant for several weeks during the second quarter of 2024 to introduce cost savings and new vehicle technologies to the R1 platform. Now, these include a significant consolidation of electronic control units, a simplification of the wire harness, and a reduction of hundreds of components and suppliers. Now, RJ mentioned that they expect contract renegotiations and supplier changes to make up much of these changes in costs. And actually, they're benefiting now from basically the collapse of legacy auto in order to be able to negotiate better rates from these suppliers. Sorry for the blurry image. This is the way it was in the PDF. I swear. Now, Rivian mentioned that 50% of the cost reductions is their plan to reduce variable cost per unit. Oh, here, I'll hide my face again. There we go. The majority of this will be accomplished through material cost reductions planned as part of the shutdown. As a reminder, this is through engineering cost reductions, such as their ECU and wire harness simplification through their commercially negotiated cost downs and contribution from lower raw material costs. And the lower price of lithium is also helping them. Now, the second driver, representing approximately 35% of reduction, is through Rivian's focus on driving greater efficiency through their production facility. They are increasing the R1 line rate by approximately 30% to produce more vehicles more efficiently. Now, the final piece of the bridge, which represents approximately 15%, is the scaling of their non-vehicle revenue. With over 70,000 Rivians on the road, they have the opportunity for increased revenue areas such as regulatory credits, accessories, services, remarketing, showing my face again, and software-enabled services. Oh yeah, this reminds me. Sandy Munro did a fantastic video on various areas of cost reductions possible in the R1 platform. This video is about a year and a half old or so. For those that don't know, Sandy Munro is world famous for his teardowns on EV vehicles. Munro's team noted that one of the main issues with the R1 line is the unibody versus body on frame. Rivian system is like a hybrid between the two, and this created redundant structures. The R1 is smaller than the F-150 Lightning, but also heavier. Now, the team mentioned that Rivian erred in trying to get something to production quickly versus taking a step backwards and looking towards weight optimization and simplification. Now, I highly suggest watching Munro's series on the Rivian R1 platform. It is amazing content. The link is in the description. Oh, and this is not a sponsor. Let's face it, my channel is far too small to have sponsors. Speaking of my small channel, make sure you like and subscribe. Now, let's hope that some of these issues Munro addressed are fixed during the downtime. Going back to the call. Now, Rivian expects these changes to improve its material costs, production efficiency, and margin profile over the long term. However, the shutdown will also impact its production and delivery dates for 2024, as well as its near-term cash flow and profitability. Rivian acknowledged that it faces some headwinds from the macroeconomic and geopolitical uncertainties, such as the historically high interest rates, which have negatively impacted the demand for EVs. Rivian said that its order bank is noticeably reduced over time as deliveries have increased and cancellations have occurred. It was only during the call that the word cancellations was first brought up, and that's also a major point of concern. Now, the Q2 shutdown is expected to negatively affect all 4 quarters in 2024 to some degree, and it actually also affected this last quarter. So it's actually a broad adjustment, but it's not a permanent adjustment to the negative. Ultimately it'll be a positive, but it's going to affect their numbers negatively through 2024. Now, modest gross profit is expected by the end of 2024. Rivian also mentioned that their key focus is on increasing demand to achieve their 2024 delivery targets. Now, it's interesting that Rivian is having to focus on demand issues when they expect about the same level of sales in 2024 as they had in 2023. It's not like they're having to make moves to increase sales. They're having to make moves to keep the sales the same, which isn't good when your profits are in the tune of negative billions. $70 million for the Q4 gross profit decline were due to the planned shutdown, or about $5,000 per vehicle. Now, over the long term, they continue to see a clear path to approximately 25% gross margin target, high teens adjusted EBITDA margin target, and approximately 10% free cash flow margin. Oh, let me hide my face again. Okay. So, things look good. I think they're moving in the right direction. But honestly, my main issue with Rivian is this. Tesla has never sold their vehicles at a negative gross profit. Ever. It's really kind of crazy. I was surprised when I found this out. I did not know until recently that they had never done this. So I was shocked. I'm as shocked as you are. In their entire history, not once. So let's take the most equivalent year, 2015. In that year, Tesla sold 50,580 vehicles in 2015. Now, again, this is back, 9 years ago now. Now, gross profit was a positive $219 million. Now, what drove Tesla to net losses was expanding and research and development. But Tesla was always gross profit positive. And honestly, even then, Tesla almost went bankrupt. So honestly, there's no more excuses. Rivian needs to be gross margin profitable as soon as possible. So what am I doing? Now, Rivian makes a great truck, a very loyal customer base. People love their vehicles. Heck, Sandy Munro and his wife love their Rivian. It's the best truck I think they claim they've ever had. So they have nothing but praise for the vehicle. It's only the manufacturing over-engineering that they had an issue with, but the vehicle itself, from a consumer standpoint, is fantastic. I also like the extreme focus on becoming gross margin positive. The management knows what needs to be done. The only question I have is, do they have what it takes to do it? And I'm not yet completely sold that, the problem is solved. I need to see the results from the shutdown in Q2. And basically, does gross margin turn positive in Q4? Until we know that answer, I have to stay on the sidelines, unfortunately. I wish I could jump in, but the negative numbers, the negative net income numbers are just too large for me. It's just too big, honestly. So I just need to see the money. Now, I could be totally wrong on this. I hope I am. I hope that today's price will be the lowest ever for Rivian. It's just that my risk tolerance is low right now, and I need to be absolutely sure that Rivian will remain as number 2 behind Tesla and will come out of this as a strong and profitable company. Rivian is going in the right direction, but there are uncertainties. Now, it's because of that I'm staying on the sidelines for now. If things change and Rivian starts printing cash, I'll be here to invest. As a wise man once said, happiness is cash flow positive. Right. Happiness is positive cash flow. I screwed that up. So Rivian still has a pretty good chance of doing the impossible. That is, becoming a profitable mass maker of EVs. I'm not overly concerned about Rivian's liquidity just yet. They can easily raise capital either through debt or a share sale. I am keeping a keen eye on Rivian and will cover the March 7th R2 unveiling. Don't forget to like and subscribe. Thank you for watching, and I'll see you in the next one.